Hey guys, I just wanted to jump in for a second and let you know a little bit about today's live stream sponsor, DNA Funded. DNA Funded has very generous profit sharing up to 90% and 3 different unique challenge types. For those looking to get funded, they also have speedy payouts, unlimited trading days on the first and second phase of their challenges, a very wide list of different things you can trade with over 800 different assets tradable, and maybe the most important component, a very experienced team behind the whole operation. So if you're interested in learning more about DNA Funded, click the link, check it out, see if it's right for you, and make sure to do your own due diligence to see if what they have to offer fits your trading style. For 20% off, you can use code A1T20. Again, that will be 20% off any of their challenges you'd like to check out. Thank you again to DNA Funded for sponsoring today's live stream. Now back to the show. All right, everybody. Good morning, good afternoon. Welcome back to another live stream. Hope you're doing well, trading safe in these crazy, crazy markets. We got the NASDAQ down about 1.8% here this morning. We've got the S&P down 1.4%. And you guys probably have already seen it, but look at gold. Gold up another 2.7% today. And definitely just a shocker how far this thing has run pretty continuously without a pullback. It's one of those things that you can kind of come back to this show over the years. I mean, you could go back on this stream like 6 months ago, 12 months ago, and we've been saying the same thing for a long time, that gold just keeps going up, and that unfortunately people keep getting completely beat up by this gold story that seems kind of just to never end. Gold goes higher every single day. Will that last forever? Of course it won't. Nothing goes up forever or goes down forever. But what we have to remember here as you know, traders kind of watching the market, investors watching the market, is that over the long term, gold tends to go up. Why? Because they print more dollars and they can't print more gold, right? They have to find more gold, extract. There's more, there's more effort, there's labor that goes into finding and mining gold, right? So the point is, over time, gold should go up. But recently, it's been exploding higher. And I want to talk about this phenomenon. I think this is going to be the topic of my video today, which is basically, why gold is going up. Not just, we've seen gold going up, but why is gold accelerating? Like it's not only going up, but it's picking up speed after years of already going up. What I want people who are newer to trading to understand, because it's such a common mistake made by new traders. They think something that has gone up very far has to come back down. Like they think that, okay, this thing is very stretched, it's got to pull back. I think all of us can agree this chart looks pretty stretched. Like we've just had a one directional move here in gold for a couple weeks straight, zoom out, a couple months straight, zoom out, a couple years straight, gold has gone up. So you look at that and you say, like the natural new trader response to that would be to say, hey, that's gotta revert, right? That's gotta pull back to the mean somewhere. And while that is true, over the long term, gold will have a couple months of downtrends. We might even get a year of a downtrend, right? We don't know when that's going to be. And the new trader mistake is believing that you can call when that's going to be, right? Maybe you can, maybe you're a superhero, but I've done this for almost a decade, and I can tell you I have very little ability to call when the top of a monster trend is topping, right? It's like the famous last words of new traders. I think gold's too far. It's got to pull back, right? We need a pullback, bro. Like we do, Joey. I'm not like disputing that. This thing is totally overextended, overbought. If you're a technical analyst, overbought on every extreme, right? But if you're a fundamentalist, this thing still has room. Why? Because the US dollar is getting beat up because people aren't certain, or there's a lot of uncertainty surrounding US trade, US alliances. And so US dollar is the kind of thing contributing to this gold rip. You're seeing the dollar index fall confidently now below the 100 level. And so you say, well, how far can this go, Nick? Well, how many dollars can they print? Infinity. How much gold can they produce? Not infinity. There's a finite amount of gold. There's an infinite or infinite amounts of dollars that they can print into the system. And so all of this uncertainty, all this central bank buying, all this even abandonment of US treasuries, it's concerning. Typically, when you get people scared about markets, they flock to the US debt market. They buy treasuries as a defensive measure. We're not seeing that. In fact, we're seeing the opposite. We're seeing people in mass selling their treasuries and buying gold, selling stocks, buying gold, selling treasuries, buying gold. That is true, genuine risk off to a different level. When you see treasuries not behaving as risk off, really, really crazy. So, Bulent, good to see you, channel member. Thank you for that. Hey, Nick, I'm almost done with the DNA funded challenge because of the crazy trade or gold rallies. Congratulations, Bulent. That's awesome. Congrats on your DNA funded challenge. We did put in a link here in the chat. If you're interested in checking out DNA funded, you can use promo code A1T20 for 20% off any of their challenges. It's a nice little subscriber discount that you can check out for yourself if you're interested. So where do we go from here? You know, because I know a lot of people who are probably not in this gold trade, they're like, holy crap, I wish I was, right? That thing's a monster. I've been there so many times in my trading career. So I'm not saying that to mock anybody or tease anybody or you know, rub it in, because there's been so many times where I've missed a move like this and it stinks. And I understand that it stinks. It doesn't feel good. You're like, dang, that was the move and I missed it. Or you're looking at, you know, a lot of people felt that FOMO around Bitcoin, right? When Bitcoin was making this kind of move, a lot of people felt the FOMO over there. Gosh, do I wish that I had, you know, a huge leveraged position on Bitcoin when it made that massive, massive move, right? So the point is, FOMO, don't let it get to you, because again, the markets aren't going anywhere. There's going to be more moves. Don't make silly mistakes. But I think if you're looking at gold, for me personally, regulars, you'll know what I'm about to say. What are the actionable things that we can do on gold? You ready? Can I sell this? No, of course not. Fundamentally, we have been bullish. We have falling inflation rates. I was doing some research on gold this morning. Why is it so bullish? You have falling inflation rates. The Fed can cut rates. That's bearish for the US dollar. Trump and Powell are head to head. They're fighting again. That's making people uncertain, right? That rising uncertainty, positive for gold. The top setups algorithm has detected gold is a bullish item since February 6th. That has been a pretty incredible call. And I've stayed on that side of the trade since then. So gold looks super, super strong for a number of reasons. And we're sticking to, you know, the system this year. Staying systematic has been a theme that I've been talking about a lot on the channel, right? Staying systematic. What I mean by that is looking at sentiment, technicals, and economic data, making decisions, and trying to ignore the news headlines. Although they're exciting and they make for fun, you know, topics to discuss, at the end of the day, what's guiding my trading decisions is right here, the top setups page, which is looking at the data and just helping me to spot opportunities. And then I'm using simple technical analysis to place my trades. If you want to know, Nick, how did you know gold was going to do this? I didn't, right? That's the thing, is I'm not going to sit here and claim like, oh yeah, no, I knew gold was going to make this move and it was all going to happen in 2 weeks. Heck no, I wish I did. I wish I could tell you what the market's going to do like that, but I'm not a fortune teller. I'm just a trader. So we had two things, right? We could narrow it to two things. EdgeFinder bullish setup. That's part one. Part two is we pulled back to a key area of support here. I took my initial trade and I took a loss. Went long, stopped out. I took a second attempt, right? Second attempt at the 61.8% retracement zone, which lined up very nicely with support. That second entry was all she wrote. Market just ripped from there. Again, oftentimes I have to take more than one entry to get the right trade. Entries are really difficult, but directionally we were incredibly correct with gold, right? So gold, the bullish idea from the EdgeFinder was part one. Part two was looking for the technical setup, being patient, and then now trailing stops and letting that trade run for all it's worth. That is it. And this trade has become a monster trade. Like I said, I wish I just had tons of these types of trades. I rarely do catch this kind of move, such a quick, massive runner in one single direction, but it's a monster. And so this is when it comes to my trading style, this is what I trade for. Like, this is what I look for with this trailing stop methodology, is moves like this, which are very rare, but when they happen, they make up for all of the small losses and way more that I have to take in order to find this trade. So it's like going fishing. You know, you're going for the big fish. Most of the lines you're going to cast are not going to result in anything, but every once in a while you catch the big one. And so this is the big one. The big one being this gold rip to the upside, EdgeFinder top setup, pull back to support, 61.8% retracement, trailing stop. Keep it simple, keep it systematic. That's what we're doing this year, day in, day out. Sticking to the system. Blunt says, what about silver? What are your thoughts about it? So silver's still getting a neutral reading on the EdgeFinder. I don't love the technicals nearly as much as gold. You can see it's just not, like, I love silver. Don't get me wrong. Like, actually, from a long-term perspective, I just love holding silver. I own some physical silver. I love the idea of keeping some in the portfolio. But look, you know, I'm also focused on price action, and we can see it. Gold is the leader. Like, gold is dominating silver in recent times. And so, you know, I'm not smart enough to tell you exactly when silver's going to take the lead and outperform gold. I just can't. And so, you know, what I found, guys, is that I know I'm bragging about this, so this is going to sound ironic, but a level of humility in terms of simply saying when you don't know something in trading goes a long way. Like, I didn't know this gold trade was going to do this. I could be a jerk about it and be like, yeah, no, it was very obvious, and you know, it's perfectly, you know, timed, and we knew it was going to happen, and we entered right here, and that was it, right? I don't know that sort of stuff. I can't claim or even pretend to claim that I knew gold was going to make this kind of move in such short succession. But that's how I've built my trading strategy and system, is to admit that I don't know what the market's going to do next, but I want to be positioned to take advantage when these moves happen, right? So I went for the long, and I got way more than I guessed was going to happen. Like gold has just ripped. Silver, just not loving the price action as much. Silver could still be a great trade. Don't get me wrong. Like, silver might catch up. And what I mean by that is, over the next 12 months, maybe we see silver do one of these guys and start to actually outpace gold, in which case I'm going to join the leader. I'll probably go long silver, right? So I do typically trade the leadership role when it comes to gold and silver. Like, if silver's doing way better, I'm typically going to be trying to trade that one and trade the momentum there. So, like I said, gold, bullish setup, still sticking to the trade. If you're not in this trade, what do you do? If you're not in this trade, what do you do? Well, I'll tell you what I do, because I can't tell you what to do with your trading account. You got to do the work yourself. But here's what I'm doing if I'm not in this trade. If I didn't take this trade, first of all, I would be pissed. And I'm telling you the truth. If I had waited, like, my entry was so close to being missed, and it has happened to me in the past where my entry did not get hit, and I missed it and it ran off without me. So I know how that feels. The first thing is I'd be really annoyed, and that would be very valid. Like, let's just say I missed this trade by, you know, 0.5% or 1/4% or whatever on the move of gold. I would be so annoyed, right? And that's okay to feel that way. Like, if you're like, oh my gosh, this FOMO is killing me, this is so annoying. But the big difference is I would not act on it. I'm not chasing. I'm not going to short this market angrily, right? Those are things that I've done in the past. Most people probably have. And it's normal to feel that want. If you're somebody who's like pissed that you missed this, right? It's natural to be like, I want to short this thing. Like, it's got to come back, and then I can ride it back long. Like that, I don't do that. Okay. That's not what I'm doing in this case. What I'm doing is, okay, took an entry, or let's say I wanted the entry and I missed it, right? Step one, I'd be annoyed. Step two, I would do nothing, right? This is important because this is valid. If you're like, the market is making me so annoyed, I missed these moves, this was it, that was going to make my year. Look, you're valid for being annoyed. Is anybody annoyed or frustrated by gold? Can you do me a favor? Type yes or put a 1 in the chat if you are currently annoyed by gold or a chart that you're watching and you've missed some kind of move. If you've missed some kind of move and you're feeling FOMO right now, can we just like have a safe space for a second? Type yes in the chat if you are in that circumstance, because I've been there so many times, and I'm not, rubbing it in or telling you, oh, I have the perfect answer for when. That's going to happen, and it's valid to be annoyed, right? To be like, this is stupid. I missed the move. I was all set up. I was correct in the direction. I missed the move. Step one, valid to be mad. Go punch a punching bag. I'm not even kidding. Like, find a physical outlet. Take a run, punch a punching bag, work out. I personally think this is my biggest stress reliever as I hit the gym or I go on a run or do something physical and just let it out, because you have to. It's annoying when you miss a move. Like, nobody's gonna, well, some YouTubers will tell you, oh, just trade like a robot. Don't feel that, bro. And I'm like, no, that's annoying. It's annoying when you miss the move. Step two is do nothing. You can't do anything about it. You can't change it. You can't control the markets. But one of the biggest mistakes I see most people, myself included, doing in the past is wanting to now short this market because this is stupid and I missed it and I'm mad, right? That's a silly mistake that a lot of people do. So the real diligence and discipline is to do nothing and to just wait. Wait for a pullback, wait for a proper setup, wait for your system to produce the next opportunity, move on. That's all you can do. It's annoying, but it happens to every trader. The best traders in the world have that happen to them. In this particular case, this trade, I got it right, but I don't always get it right. Sometimes I'm early, sometimes I'm wrong, sometimes I miss it. It's very, like, don't let anybody tell you that trading is easy. It's really hard, and it's really frustrating when that happens. So if you're feeling frustrated, you're valid for feeling annoyed, but don't act on it. That's where most people get it wrong. They're like, no, I'm going to either chase this market because otherwise I'm going to just miss more of it, or they short it because they're angry that it's gone so far without them. Don't do that. I'm telling you, you're not trading with a sane mindset. You're trading with revenge. You're trading with anger. You're trading with, like, all that stuff is going to get you in trouble, because not only you're going to do it likely, you're going to likely do it with too much size. You're going to short this thing aggressively, and then when it rips, it's going to blow your account, right? Be careful, okay? If you're in the move, manage your trade the way your system tells you. For me, that means trail a stop. I'm in the move. I'm going to keep trailing, keep locking in more profits until I eventually get taken out. If you're not in the move, sit on your hands and wait. That's the only answer. It's not a fun one, but it's the answer. That's the only thing you could do. The two things that my go-to things that I do when I'm frustrated with FOMO or I'm in a losing streak is some sort of physical exercise. And I like to play chess.com. Like, I go on chess.com and play games of chess because it gets my mind on something else that's highly critical thinking, right? But staring at charts is just going to get you in trouble. So don't do that. Don't do that. Okay, let me just quickly take a look here at a couple other charts too. By the way, if you're enjoying the stream, hit me a thumbs up on the stream. I greatly appreciate the support. Gold's up 2.43% here today. S&P's down 1.6. U.S. stock market just opened up. NASDAQ's down 1.8. Dow Jones down 1.4. No setups for me on indices at this time. Technicals turned bearish once more, so really nothing here for me. I am interested in the NASDAQ if we can get some kind of break of structure to the upside here this week, but we're just not seeing that right now. Risk off is still thriving. What's your ELO, Nick, in chess? 1v1 me in chess? So my ELO in chess, it alternates over time, because if I'm playing a lot or I'm playing a little, it goes up or down. On a high note, like when I'm really playing, I get up to like 1,300. And I'd say if I haven't played and I just pick it up again, 1,100. So it's a tight range. But I know I could be better at chess if I like really disciplined and like analyzed my games and stuff, but I play it more casually. Um, but I played for years. So, anyways, dollar index, big loser today, broke down under 100. It continues to move lower. And what's interesting, what's concerning about this really is you have the dollar weakening and yields stabilizing and moving higher. That combination's not pretty, because what that's telling you is the bond market is saying US bonds are not super reliable in the eyes of investors. They're saying we need more yield if we're going to buy US bonds. And the dollar index is saying people are preferring other currencies. They are the strength of the dollar relative to other currencies is weakening, right? Whenever we're looking at the dollar index, that's what it's saying. It's saying things like the euro should be up today, the pound should be up today. And here's something FOMO wise that I'm wishing I was in. I wish I was in all these dollar crosses, but I'm not, right? So I'd love to be long pound dollar. And actually, this is on the EdgeFinder, a setup that I'm waiting for, right? We have euro dollar, Kiwi dollar, pound dollar, Aussie dollar, right? All of these US dollar currency pairs are trade setups that I want to be in, but I'm not in. Dollar yen bearish setups, all these things are things that I'm watching for, but still waiting for pullbacks myself. Like euro dollar, if we get these kinds of pullbacks, then I might be able to play some trades on the euro. But there's nothing I can do up here, and that's frustrating for anyone, right? If you're like, I want to be in these trades, but I know where I'm supposed to enter, but I can't get those trades because they're not at my levels, right? There's all you can really do in that situation is either set alerts or just check back in. And if you can't take any trades, move on and just do something else with your day. Like that's actually a really important strategy. Is just, if you can't enter anything at this time according to your strategy, then close the charts. Dollar pairs moving at last because of Trump. He doesn't leave Powell alone. Yeah, they are beefing it up, right? Trump's talked about trying to get rid of him, and the market does not like that because Powell's kind of seen as a stabilizing factor to the markets. And I believe Trump wants to get in this guy. There's another the next chairman. I forget his name, but a lot of people are. There's a certain person that's suspected to become the next chairman, and if Trump can put in someone there that is way more favorable to his agenda and objectives, he could kind of control the narrative a little bit more with what's happening at the Fed. So that's making people nervous, right? People are nervous because again, the Fed is meant to be this bipartisan entity. And believe it or not, Powell actually was put in initially by Trump, but now there's all this uncertainty surrounding that. So clearly, the bond market doesn't like that. The bond market does not like beef between Trump and Powell because, again, Powell is seen as sort of a reliable, stable chairman. And so we'll see. Definitely some drama there. But again, I think that's yet again why gold is such a winner in all this, is there's just so much uncertainty surrounding everything that's happening in Washington and in Ukraine and Russia and Europe. There's just it's interesting, post COVID, we really saw a ramp up in geopolitical tensions globally. We've seen it for the last 5 years, right? Think about the last 5 years. We've really had a test to the infrastructure of this world, right? If you think about now we've got the US and their different allies negotiating, and whether or not those negotiations will materialize into something positive is yet to be seen. I'm hopeful, I'm optimistic that maybe there will be some positive developments, maybe between the US, Japan, US, and Europe. But clearly, China wants to fight back. So there's tension there, and the market doesn't like that. So euro dollar, Kiwi dollar, these are ideas that I like a lot. I traded both of these on the long side, got out way too soon on those trades, but looking for opportunities to get back in on those. Link for DNA funded. Here you go. Thank you to the producers. DNA funded right there. You can use our promo code A1T20 for 20% off any of their challenges. If you feel you are ready to get funded, I do always encourage when it comes to funding programs, challenges, prop firms, whatever, make sure you have the results before you try anything. Again, there are great companies out there that offer those services, like DNA Funded, I think is a great option to look into. But none of them are worth your time if you're not yet a profitable trader. So only approach those sorts of opportunities if you yourself would consider yourself a profitable, consistent trader. Will Ivan be the new chairman? I think so. I think we should make Ivan the new chairman. Ivan, if you don't know, if you're a new stream viewer, he's a regular contributor to the A1 Trading Show here. Nick, any comment about pound CAD? Not a chart that I usually trade, but I could pull it up. Also, I'm thinking, guys, I think I'm going to start rolling back the stream start just a little bit earlier because I implemented this new way to ask questions. And I think we have somebody coming in just a few minutes. I think I am going to implement an earlier stream start so that I can get to questions more. We've been doing this new question and answers segment on the live stream, and I've really been enjoying doing that. I want to do more of it, but I think I need more time to stream in order to still do charts and also do this new questionnaire concept. By the way, if you haven't already picked up a copy, time is running out on our biggest sale of the year. We're currently doing the EdgeFinder 45% off discount. If you're interested in picking up a copy at the lowest price that we do all year long, we're celebrating 3 years since we launched the EdgeFinder to the public. We've built so many tools within the EdgeFinder over the last 3 years. It has come a very long way. And to celebrate that 3-year celebration, we're doing 45% off. It is the lowest price on the EdgeFinder that you can get. If you're interested in finding out more information about that special offer before it ends, here's a couple things you should know about it. One, the EdgeFinder is a lifetime purchase. So you purchase once, you don't have to pay again. It's not a subscription. I love that personally because when I look at, whenever I'm serious about a certain product, I love when they give me the option to pay once, not to pay every month. So that is something that we do offer. So it's a one-time payment at 45% off. It comes out to a lot lower than it usually is in terms of its cost. The other thing is we do offer for people who struggle with the payment but want to take advantage of the deal. We do allow you to split it into 2 payments if that's easier. And if you would like some information about that, the best way to do so would be to send us a direct message right here. So that link that just got dropped in your live stream chat, you can click that, speak directly to a member of my team who can help you out with splitting up the payment if you need, or paying one time, whatever you want to do, and getting some information about the sale before that does end. It ends here in just a couple days. So that's your last call in terms of picking up a copy at the lowest price of the whole year. So Rob, thank you very much for the stream donation, 100 rupees. Says, with so much uncertainty and gold flying, implying a risk-off environment, isn't it a bit confusing why the Australian dollar and Kiwi dollar are suddenly doing so well? So, let's actually look at that because that's a great question, by the way. Thanks for the super chat and for the question here. So if we take a look at like the Australian dollar against the Japanese yen, right, it's not very impressive. Right? It's really the dollar, US dollar specifically. And that's the thing about currencies. If you're going to be a currency trader, remember, you got to look at both currencies independently to get a full context view of what we're looking at here. The Australian dollar is looking really strong against the US dollar, but is the Australian dollar looking really strong against the Swiss franc? No, it's looking really weak. Is the Australian dollar looking good against the Canadian dollar? Pretty mixed, right? It's bouncing back here, but I wouldn't say it's dominating the picture. What about the pound against the Australian dollar? Well, you can see here the pound is actually beating up on the Australian dollar. So it's a great question, but remember, when you're trading currencies, you've got to think about, the currency itself versus other currencies, not just the US dollar, right? So if you're looking at the Australian dollar against the US dollar, is this performing well? Well, yes, it's bouncing back nicely and actually starting to break out, looks like. But it's mostly because the US dollar is like the weakest of the group right now. The US dollar is getting beat up because where it was this kind of stable, strong currency, we're seeing a lot of weakness because now all of the trade uncertainty and the the Trump administration's changes, not necessarily, people love to just say, oh, Trump is, killing the US. Maybe some of all of these changes will actually be very net positive for the US in the long term. Maybe not, right? We don't know. And that unknowing is what's making the market just sell the dollar for now. They don't know, right? Maybe all the trade negotiations work out wonderfully for the US. And in 12 months' time, the US is absolutely dominating US global trade again. I mean, it already is. It's the biggest consumer. That's not changed. Just because there's uncertainty doesn't change that the US economy is still top dog. It's the massive consumer. It contributes to major amounts of consumer demand across the entire world. There's no question the US contributes massively to the global economy, and it's central to even China, to Europe, to Asia, right? The US is key to the whole kind of scenario. If you just cut it out, we'll enter into a horrible, horrible recession globally, like decade long. If the U.S. was just cut off completely, no trade, it's over, right? It would be devastating. So the U.S. knows this, and the current administration is attempting to leverage that in order to renegotiate trade and saying, hey, we're contributing a lot to this global system, and we're operating at a massive deficit that we know will hurt us over the long term. And so we want to renegotiate that. I think that's valid. I don't necessarily disagree with that. Now, the more controversial part is not that. People on both sides are like, yeah, trade deficit over the long term, that destroys a country. Because again, our money, our investments are getting handed off to the rest of the world over time. If you're operating in a massive deficit, U.S. Treasuries, U.S. stocks become more and more foreign owned. And so our country gets degraded by that. So I think most people are like, okay, valid to negotiate trade, but it's the way that it's being done that some people love, some people hate. And that's where the controversy comes in. So we'll see. But again, that's the controversy. I think that regardless of what your thoughts are on it, if we leave that to the side, uncertainty is unquestionable. Look at gold, right? Gold, uncertainty is unquestionable. Look at bonds. Bonds should be ripping higher in this uncertainty, but the reason they're not is because the US is central to the uncertainty. So people are saying, oh, well, I don't want to buy US bonds. If the US is the uncertainty factor, people are like, okay, where do we go? And they run at gold. That's what's happening, right? We're not going to do a 60-month payment plan on the EdgeFinder. We're not selling cars here. If you do need to break it up, by all means, send us a direct message. Our support team does a great job just working with people to make it more accessible to them. So yeah. Anyways, I think we had Ivan coming today, but maybe he's forgotten about us. In the meantime, should we do some questions? I love doing these questions. You guys want to do some questions? Let's do some questions. In the description, by the way, I'll also mention this. I know some of my viewers watch on a television. Anybody watching from a TV? I guess you can't even tell us because it's really hard on a TV if you're watching to like chat in that you're watching from a TV. TV, the one downside to watching on TV, it's nice to have the big screen and everything, but it's hard to interact. If you do want to take advantage of the EdgeFinder sale or you want to do anything, you can also just navigate on your phone or laptop to a1trading.com/edgefinder and find out more information there. Okay, if you have a question, feel free to drop it. Also, last time we did these, I ran out of time and I felt really bad about it. Like people asked questions, and I've done that where I've asked, like I watch a live stream every Saturday about how to YouTube, trying to become a better YouTuber this year. I've been talking about that a lot. I've been asking questions every week, and they always answer the questions. But there's been times where I ask a question, they run out of time, and I don't get my question answered, and I know how bad that feels. So if you have a question that does not get answered, I've looped in my support team to follow up over email and to provide links and documents and helpful resources to everybody who asks a question, even if I don't get a chance to answer that question on stream. So the reason I wanted to make that point is because if you take a question, or if you take time to write us a question here on the stream, first of all, I really appreciate that. And I want to make sure that even if I don't get a chance to respond to it, I will probably get to it. But if I don't, I just want to make sure you're going to get heard. You're going to get your response because, again, we appreciate you for leaving a question on the stream. Okay, we got 2 questions already. So again, first come, first serve on those. Bryle says he or she has been trading for less than 1 year. They're looking to better understand the EdgeFinder. And they said, hello, Nick. I plan to make around 3 trades per month, possibly more across stocks, Forex, futures, gold, and other markets where strong trends typically occur. I'm planning to purchase the stock box and the EdgeFinder, still clueless about, but still learning this tool at the end of April. What are the top qualities or criteria you include in your checklist to identify the best 3 trades to take each month? P.S. I also rely on news and economic data, the ones you share within the EdgeFinder. One of the best examples I experienced was when Trump's tariffs had a major impact on trade-related assets. So I was wondering, what would your checklist look like for identifying a strong trend that's driven by news or fundamentals? Great question, Bryle. Thank you for dropping that. So I have an easy example for you right now, because obviously I have the ultimate ability to brag about this gold trade. But I would encourage you to, if you're going to use the EdgeFinder, understand that first and foremost, it's not a point and click, oh, gold is bullish, I'm going to buy right here, right? But one thing to really make sure that you understand is that the EdgeFinder is basically a scanning software. So it scans a lot of market data. It gives a general bias on currency pairs and commodities, the way our algorithm is programmed to do so. You can find out an in-depth, as Lee has pointed out. There's a dedicated video on the A1 website regarding an in-depth tour of the EdgeFinder. I would encourage you to take some time before you buy it. Anybody who's considering purchasing the EdgeFinder, I want you to make sure you know how that functions and how it might be a good tool to implement into your trading. So with that said, with this gold trade, right? Which, by the way, oh my gosh, gold's up almost 3% today. Insane. Absolutely insanity. So is there a degree of headline components to this? Kind of, but that's not really why I personally take trades. Like if Trump says something crazy or Powell does something, that's not really usually a reason why I take a trade. The reason I take a trade is because this system right here tells me, okay, there's a bullish setup, and then I look for a technical entry and I trail stops accordingly. So whatever your strategy is, you can totally use the EdgeFinder to incorporate some level of fundamental analysis, and I would encourage you to do so, right? You can look at CPI data and understand what inflation is looking like, but I'd really encourage you to make sure you go through all of the pages with the EdgeFinder. If you want to be a real, true, fundamentalist, go through all of our data and make sure you really understand it. On most of these pages, we have a full breakdown and explanation on our website, a1trading.com/edgefinder-tour. I would encourage you to go there and research that in more detail. If you have questions about the EdgeFinder and you'd like to set up a tutorial call, a one-on-one training call with our team, highly recommended that you do that. Here's how you can do that. Head over to a1trading.com/edgefinder. Okay. If you want to explore the tool in full detail and you'd actually like to do some training with one of our team members, head over to a1trading.com/edgefinder and request a free training call right here. It'll ask you to fill out a form, and you'll be connected with a member of our support team who can get you some information about how you can, again, find out more information about it. Okay, so let's see if we have any other questions that just came in. Yes, we do. A couple. Thank you guys again for the questions coming in. OT, good to see you back. Thanks for tuning into the stream again. It's been trading for less than 1 year. Does not yet own any of our softwares, but interested in the future. Would you consider giving us a day trading signal on gold with a laughing emoji? No, because I am not really a day trader, first of all. Second of all, I think that handouts in terms of signals are a flawed logic. And I'm not doing this to tease you, but this is an understandable question. Like, hey, any trades for today on gold? Like I've seen people comment that for years, right? But I would encourage you to rethink the way you are structuring this. I'm not a fortune teller. I get the markets wrong sometimes, and I can't tell you where gold's going to be in the next hour. I wish I could. I'd be a bajillionaire. All I do is make probability-based decisions, educated guesses, and I take small risk per trade, and I let winners run. I'm not right all the time, and if I tell you I think gold's going up today, it might go down. If I tell it's going down, it might go up. Like I'm not a fortune teller, and nobody in the trading space, even if they sound super smart, nobody knows with certainty what's going to happen next in markets. All we can do is make educated guesses and manage risk. Okay, Titus, next question here. They've been trading for less than 1 year. Their goal is to improve their trading psychology. They're interested in our tools. By the way, hit us up if you have any questions, a1trading.com. What channel is best to watch to keep yourself involved with the news? I currently watch Bloomberg. Is there a better channel? I only trade Forex, but I just want to be kept in the loop on everything. So there's plenty of financial news out there. What you have to be careful about with like Bloomberg or CNBC or even my channel, every channel, right? I think you should watch a diverse list because there's bias, especially when you're watching like a Bloomberg or CNBC. Inevitably there's a little bit of bias in there, and I watch these things, so I'm not telling you that they're useless. You can listen into that stuff, but you can spend hours a day listening to that stuff, and it can be helpful, but also it can be almost too much information. So I would encourage you to maybe just consider, you can read an article or two, but really, again, I know this still sounds like a sales pitch, but the reason I look at the data so heavily is because the data filters out a lot of the noise. And a lot of those stations, whether it be Fox, CNN, Fox Business, CNBC, whatever you watch, right? There's just a bias there. It could be a political bias. It could be somebody really hates Trump or somebody really likes Trump and they just stand by everything he does or hates everything he does. And that doesn't really help you. So I'd encourage you you can listen into those things, but do so very carefully because they have a lot of bias on them. And again, that goes both ways. I'm not saying like, oh, the media left is gonna like, I'm not one of those people either. I'm just saying both sides. You can get caught in an echo chamber that doesn't help you in your trading. So be careful with that. Andel says they've been trading for 1 to 3 years. Their goal right now is to better understand the EdgeFinder. What is the value of the 10-year treasury when trading FX? Massive, massive, massive value. What the treasury is doing, 10-year treasury yield is doing, is telling you what the bond market thinks the Fed's going to do next. Essentially, it tells you the confidence in the U.S. economy. It tells you risk sentiment, kind of all of that at once, similar to the U.S. dollar. But I don't think if you're somebody who trades U.S. dollar crosses, you should absolutely also be watching the 10-year yield if you're a fundamentalist, because the dollar right now would tell you, oh, everything is completely terrible. The Fed's going to cut rates like crazy, right? Well, the bond market says, oh, not so fast. Inflation's still hot, right? Or not hot, but the Fed still seems to be poised into saying we're going to hold rates steady, pushing back on that concept. So just something to think about is the yields. When they're rising dramatically, that's telling you that inflation expectations are higher, or it's telling you that the U.S. economy looks really strong and probably doesn't need rate cuts to do okay. And when this thing is crashing lower, it's telling you that the bond market thinks the Fed's going to need to cut rates quickly. So it tells you it's a very good way of studying the Fed. It's one of my favorite ways if you're going to study the Fed. People look at the Fed watch tool. I think you can actually get just as much information just by looking at the 10-year yield to get an idea. Let's see. Okay, that's all the questions we got. So thank you guys for those couple of questions here. Good stuff. Good stuff. So let's see. Look at that. NASDAQ down further here, down almost 2.5% today. S&P 500 down 2%. So believe it or not, I'm actually flat on the day. Well, actually, I'm not sure. Let me see. Okay. I'm probably in the red now. Yeah. So I'm in the red by 0.6% here today. Despite this wonderful gold trade, you can see there's the full context. I have a lot of stocks that I've been buying. And actually, if the market keeps going lower, then I'm going to be able to get back into shopping mode on stocks that I like for the long term. So I have this really strong gold trade, but I also have some stocks that are working against me today. So it's a mixed bag. So if I look at stocks, right, you can see the S&P 500 selling off. I probably won't buy any more stocks unless we take out these lows. But if we do, again, short-term technicals, look out below. But long-term, I think I'm getting great opportunities to buy great stocks that I like. So I know we don't talk stocks too much on the channel, but from a longer-term perspective, these are some of the names that I'm adding to. I'm adding to things like Tesla, Delta, Nvidia, Salesforce, Amazon, Meta, American Express, Google, Apple, Uber, Intuitive Surgical, Fortinet, Robinhood, PayPal, Home Depot. Is there any other ones? And Airbnb. I don't have any Coca-Cola. I just have it on my watch list for some reason. But these are names that if we get the market tanking through those lows again, I would love that. Like, that would be ideal from a long-term perspective. And I say this often on the channel. Nick, you literally had yourself with gold. Yes, that is what gold, like that, full context, full transparency. I know this looks incredible, and it is. Like, that's an incredible gold trade. But gold didn't make me, well, it did make a lot of money for the account this year. Like, it's made a ton of money for the account this year, but the account itself is just hovering around flat for the year. So like, I have to be real with you guys. I'm not going to, say I'm up massively this year. So this has been a really tough year. The market itself, you guys know, if you watch if you're a real, channel regular, I do a lot of option selling. I've been buying some stocks here recently. And so that side of my trading has been seeing some drawdowns. The momentum side, my FX side, and gold trading side has been phenomenal this year. And so between the two, I'm basically hovering around break even for the year. But that being said, like, if I was just passively invested from the highs here, the NASDAQ, I'm down 19, 20%. And at a peak, I was down 26.5%, right? If I was in, like, all in just holding NAS for the long term, right? A lot of people just passively invest in something like QQQ, which is the NASDAQ ETF. So my point is, a break-even year so far, I will absolutely take that any day. I had some people teasing. They were like, I put out that post a couple of days ago just saying that I'm about break even for the year, and that I'm proud of that. Like, I'm feeling really, really like I stuck to the rule set, and break even. I have to just stay disciplined and say I'm very thankful for a break even year so far. I know that sounds kind of silly, like thankful for break even, but again, this has been a tough year for a lot of traders out there. And it's been a very hard year for a lot of investors out there. A lot of investors who may have been really heavy long, a lot of like high growth tech stocks are seeing drawdowns of 30, 40, 50% in their portfolios. And so break even, I feel like I dodged a bullet, right? It's like, do I want to slap on the wrist, or do I want to get, cut in half, right? So I'll take the slap on the wrist. That's the point, is, by being a little bit diversified, by trading this gold move and staying systematic, I'm holding out okay, right? It's not glamorous. I'm not thriving, but I'm surviving. And that's what trading is sometimes all about. Like, 2023 was probably my best trading year. No, actually, so 2020 was it 2020? 2020 through 2021 on a percentage basis was my best trading ever. 2022 was my worst drawdown ever. 2023 was an incredible year. 2024 was okay. 2025 so far is like break even. Like, that's and 20. So I started trading in like 2016, 2017, somewhere around that area. I made this public account in 2020. And so I've had really good years. I've had mixed years. Well, I'm not going to say excellent. I've had mixed years. I've had bad years. I've had exceptional years. Over, like, the longer you do this, you realize it's kind of a weird thing to think, but if you've traded for a long time, right? You start looking at things from a yearly perspective, not a monthly or weekly perspective, but from a yearly perspective. Like, I'm gatekeeping a little because I have years of doing this behind me. But it is true. Like, if you do this for the next 3 years, you'll probably do the same thing. You'll be like, oh, I remember what I was doing in 2024. I'm not making those mistakes again. Or you might say, 2025, I made some changes that really led to changing the game for me personally. Like, I found something that worked for me. So start looking at, if you're new to your trading, start looking at monthly. Like, what was I doing in March? Was that okay? What did I feel good about March? What about April? What about May? What about June? Start looking at your month to month. But once you get in a couple years in your trading journey, you'll start looking at it from a yearly perspective. One suggestion for the EdgeFinder, it should be an app and not via Google Sheets. Other than that, amazing job, A1. Thanks, Bala. Appreciate the kind words. Yeah, we're Google loyalists over here. We do everything Google. Google is just incredibly powerful for our purposes, and for, from our developers' perspective, we have the most experience using the Google Suite to build out everything. Google Scripts, Google Looker Studio, Sheets, all sorts of automations that Google has. The cool thing about Google is, like, when you build within a platform as big as Google, there's just endless resources and tools, and they all integrate beautifully together. Trading filters increase in time frame. You can never stop learning with trading, it seems. Absolutely. Made it to the live. Good to have you here. Thanks everybody who's hanging out with us live. If you're enjoying the stream, consider subscribing if you're new. If you're really liking the stream, come back and hang out with us. So I've been talking about this a little bit recently from a perspective of, I've been talking about this concept of, like, trying to get better at anything. I thought about this over the weekend. I want to share this with you because it might matter to somebody a lot. So I talked on Friday about, like, if you want to get better at something, you have to go all in on something. Like, if you want to get, well, look, let me rephrase that. If you want to get really good at something, like you want to become a master at something, you have to go all in on that thing. I talked about my chess experience. I was talking about, I've always wanted to get good at chess or get better at chess. And I have gotten better. I feel like I've gotten to a point where I'm okay at chess. Like, I'm not I'm totally amateur, but I'm not bad. I'm not good. I'm just okay. And I think about that, and I admitted on stream that I know I'm not doing the things that I would need to do in order to become a great chess player. Like, I know what I need to do in order to get to a point where I'm a 1600, 1700, 1800 ELO chess player, which, for lack of a better, like, for people who don't know chess, that's basically just your score. And let's say you're becoming a really good chess player. I would say at like 1800, 1900, 2000, you're incredible. Like, you're really, really talented. Or not even talented. You're really good and you've learned your way there. So the reason I'm comparing that to trading is because I know what I need to do, but I'm not willing to do it. And I know that. Like, I know I'm not willing to put in that level of work to get there. I know that I don't do that. I'm consciously recognizing that I'm not doing what I want to or need to do if that's something I want bad enough. Clearly, I just don't want it bad enough. I'm a casual chess player. I'm comparing that to trading because a lot of times people know this about their trading deep down. And I think you need to make a decision. If you're someone who's on this live stream and you're like, I'm just kind of a casual trader and I'm just kind of having fun with this, okay, that's fine. But one thing that's really devastating about trading is it's kind of one of those things, if you want to become profitable, you have to go all in. I've never met people who are long-term consistently profitable who aren't all in. So what is all in meaning? Well, if I wanted to get really good at chess, I would need to be analyzing my games, spending an hour a day watching videos and studying logic, studying openings, playing chess for an hour, analyzing my games for an hour every day. Like, I would need to put in a couple hours every day to get really good at chess. But I'm not willing to do that. When it comes to trading, it's the same thing. Hour of back testing, demo testing, watching videos, studying concepts, learning about, market mechanics. So I'm bringing that up because if you're somebody who really wants to get to that point in your trading where you want to become someday maybe a full-time trader, if that's a goal for you, I do think you need to sacrifice that time, invest in your education, whether it be a premium trading view account so that you can do the replay function, whether it be a copy of the EdgeFinder, whether it be a prop firm, whatever it is, right? Some investment, both time, energy, and money, is probably something you should do or should consider. I know, obviously, like, I have something to sell, so take everything I say with a grain of salt, but I genuinely believe, like, that's some kind of sacrifice is necessary. It's vital to becoming a profitable trader. It doesn't necessarily have to be buying a course or something like that. But consider it if you're running in circles and you're not making any progress. It can really shortcut. And if you truly want to become a profitable trader, take that risk of investing your weekends into back testing or purchasing a copy of Forex tester so you can test your concepts, back test over the weekend, or picking up a copy of the EdgeFinder, right? How many times are you going to talk about gold? Let's do it one more time for equity trades. So gold is so bullish right now because the dollar is so weak. Treasuries are also getting sold. And the US stock market is also getting sold. Do you notice the repeated pattern between the three? It's US uncertainty. It's not just uncertainty, it's US specific that's really driving gold higher. Because you have gold moving, I mean, look at this thing, 3.1% today. Holy crap. It's had like so many days of 2+% gains in a single day. Let's talk about equity trade. There are plenty of other streams. I encourage you to go explore them. And if you stick around, I can guarantee you, we're going to talk about this again. And I'm going to repeat myself. And I'm going to think of you. I'm going to think of you as I say it. The next time I think of gold, I'm going to really think about equity trade and how he's really upset that we keep talking about gold. Also, keep selling your software. People in here keep buying and pay Nick. Please do that. It's worth every penny. It's not a get rich quick scheme. It's not a holy grail system. But you heard equity trade. If you want to support us, buy the software, buy the screening software. You can track economic data reports and all sorts of things. And you can spite. Hey, if equity trade is bothering you, you can spite him by buying the EdgeFinder. I don't know why people love to do that. That's probably like the biggest, like, let me try and get under Nick's skin is like, you're selling a software. Absolutely. And I think you should buy it. Sounds like you need it if you're on the wrong side. The EdgeFinder, like I said, in all seriousness, it's not a holy grail. It's not a get rich quick kind of magic box. It's just a market screener. Just like TradingView offers you a whole list of TradingView tools, or I'm sorry, technical tools. The EdgeFinder is a sandbox for fundamentalists. That's what we specialize in. That's what we build. And although our good friend Equity Trade doesn't like it, we're still going to be nice to Equity Trade. He's still welcome to join the stream anytime. Euro, still interested in the euro, waiting for pullbacks. Pound dollar, waiting for pullbacks. I'm going to sound like such a broken record this week because everything seems to be moving so nicely. And if you're in the moves, it's great. If you're not, Omar, you're amazing for that. Nick, can you please talk about gold for the entire stream? I am a streamer, 100%. Equity trade, his fingers right now are tired. His keyboard warrioring fingers are exhausted right now. I think the software's fire. Thank you. Appreciate it. I think equity was shorting gold. Let's hope not. Let's hope not. We don't want to wish ill will on anybody here. I'm teasing equity trade, but in all seriousness, I hope you're doing well, man. And I'm not wishing for anything bad on your side. Oh, we have we banned a gentleman named Igor last week, and Bulent is conspiracy. He's got a conspiracy theory that equity trade is actually Igor and Igor 2.0. That's a good conspiracy. I don't know. Who is Igor? Igor last week was somebody we had to ban from the stream. They were just picking fights with everybody. And as soon as we ban them, I do my best to read the chat, guys. I really do, but it's really hard to do at the same time as like I'm breaking down an FP report or something like that. Like it's difficult to do both at once. But as soon as we ban them, I was talking with Chandler, one of the producers behind the scenes, and we were both talking about how like Second we did that, a bunch of people were like, oh, thank God. And we were like, oh, we need to be a little easier on the ban button, because ban buttons, Chandler and I were saying, we don't like to censor at all in this stream. Like I very, very rarely will hide a user unless they're just being straight up like politics toxic or something. Like that's just not what we do here. Like I really don't censor this stream or channel very often. We don't like to ban people, but we banned Igor, and it opened our eyes a little bit to something, which was a bunch of people were like, oh, thank gosh, he was like really making the stream toxic, and it was like degrading the quality of the stream for others. And as soon as we saw those comments, we were like, oh, okay. Okay. Banning people is not always just because we're like sensitive or censoring people or whatever. But in some ways, it's actually about improving the quality of the stream for other people who are here to actually just learn and positive and constructive. Oh, look at this. Ready? Every time someone confronts you, you ban people. You should not be allowed. That is Igor. Chandler, I think you know what to do with our friend Equity Trade. This is a fascist live stream. That argument sounds like Igor, says Chandler. This is a fascist live stream, and Igors are not allowed here. So that's definitely Igor. He's been banned. Chandler with his ban hammer. I'm telling you guys, like Chandler and I, we don't like to ban people. We like your comments. We like your engagement. But when you get too far on the negativity curve, yep, Chandler said it. Flew too close to the sun. Look, I'm just a puppet here. Chandler's the real master. He's the puppet master behind the scenes. I just dance on the camera. Igor 2 is gone. That's actually so funny how like so many people called him out for being Igor's backup account. I'm sorry, I'm going off the rails, and I do apologize. In all seriousness, like people who are really negative who comment on the stream, like we really don't ban people very often. But when we do ban people, the main thing we're thinking about is let's improve the quality for people who are here for the right reasons. They're not toxically commenting. That's not a word. Toxically commenting in the chat and derailing the stream, like Igor, to his credit, has done a good job at doing here. But in all seriousness, you know, if you're here for the right reasons, we'll be staying on topic from here on out. Speaking of which, we've got a great next host taking over the show. It's Chris Pulver. You guys know him and love him. He's going to talk a little markets with you guys about everything crazy going on here in this market. Just a little bit of a check. We got NASDAQ down 2.7%, S&P down 2.35. I mean, we got some selling going on. Russell, I gotta run, but Chris, I told you about that short put that I did on the Russell. I ended up closing it on Friday. I'm feeling like a genius for that. I closed out, took that 60% profit that I talked to you about. So anyways, going to throw the stream over to Chris Pulver here in just a second. Guys, don't miss the EdgeFinder sale. It's 45% off for a limited time on our website, a1trading.com. Up next, you got Chris Pulver. Stay tuned.
Hey everybody, thanks for tuning in to today's A1 trading session. We love engaging with our audience, talking shop, taking requests, and sharing our favorite setups. It's about that time where we're going to review a bunch of indexes, stocks, currencies, gold, silver, Bitcoin, and pretty much anything else and share our insights. If you're wondering what trades I'm in, if you're wondering what trades I'm taking, and you'd like to see exactly how I'm trading everything, you can actually follow my trading signals. If that sounds like something you're interested in, we'll share a link in the chat and you can sign up. You can sign up directly with the link or speak to a support rep if you have any questions. If you're asking, what do I trade? Pretty much everything. Indexes, ETFs, stocks, options, futures, Forex, and crypto. Thoughtful analysis, active trading. Check it out. And now, back to the show. Hey, everybody. I wouldn't say happy Monday, but it's Monday. It's like the market just doesn't take a break. Last week felt like a little bit of a breather. Quiet on the narrative front. Markets today, not so much. It's like, oh, get a little bit of time just to not think about the markets over a holiday weekend, and here we are just dumping further to the downside. You know, no major pressing news that I could see other than it's just kind of the path of least resistance. I'd shared some charts. I think that on the technical front, there's still a lot of noise, but I think what's crazy is the fact that we had like a 12 to 13% candle or move rather from this low to high. That's a 13.37% move. That gives this market a lot of wiggle room just to fluctuate. Like this could be all noise, but today we're down, 2% in the S&P, we're down 2.5% in the NASDAQ, we're down, almost 2% in the Dow, we're down to 1.5% in Russell. That's all in the context of this big swing from the low on April 7th to the high on that Wednesday. We have not hit the highs. Now, I still think if you give this market some time, either this level is going to offer up some, let me use a straight line here. I think this level will offer up some potential support. And if we fill, basically we're kind of, slowly, orderly backfilling the Wednesday candle, right? That big rip on Wednesday with the announcement, the 90-day pause. Well, the markets ran with it that particular day, pulled back halfway, retested the high and failed. And here we are, like I said, just kind of backfilling that candle. So between around 51.25 and 5100, don't be shocked to see price get there. Now, I'm looking at a trade this morning. Let me see here. Looks like my live on both. Nope. Let's see if this will push. Maybe. All right. Anyway, I'm going to see if price can get to 5100 this morning. Right now, 5105, maybe a 51. If I went 10 wide, this isn't too bad. If I go 15 wide, so a $65 debit. I'm gonna look at this for like a pretty cheap debit. Let me go 30-cent debit. See if this will fill. This may or may not fill. Let's find out. 30 debit, not filling. 35 debit. It's above the mid price. All right, just got filled at 30 cents. So I'm putting in a butterfly spread for SPX. So I bought the 5110, and then I bought the 5090, and I sold 2 at the 5100. So this is a pretty inexpensive trade. It cost me 30 cents. Potentially for the day, offers up. And again, the pin is not really what I'm planning on. I could potentially make a 30 to 1 trade. Like it's ridiculous how much money this thing offers. So 965 divided by 30. It offers up a 32 to 1 profit. It's ridiculous how large that could be. Now, in order for that profit to be achieved, I need to see price basically pin at 5100 by the end of the day. Now, the reason I'm taking this trade is if price is going to slide lower, if price is going to slide lower towards 5100. So if we go down to 5100, my 30-cent debit is probably going to show at least 60 cents, maybe even closer to $1. I'm happy to take profit right there and just move on and not have to sit and wait all day and see like, oh, I hope it can. Look, it'd be awesome if it sits here and pins by 4 p.m. today at 5100, but the odds of that are pretty slim. So I'm just going to look to see, if it makes its way down at all towards 5105, 5100, and we'll see what it does. So I'm just going to set some chart alarms now, zoom in on this chart here. And I could also just waste 35 cents, which is not a big deal. So I'll go 5105, 5105, check, butterfly. So chart alarm set right there. I put on a trade this morning on SPX. I did take a small loss. I ate 50-cent and 65-cent loss this morning. Usually this is a quick win when I trade SPX in the morning, and today's price action is suggesting that because I saw that kind of gamma level of 5100, because I'm looking at market exposure down here at 51. Certainly the bears are a bit more in control. You can see a couple of big levels on SPX 5100, big level down here. Market maker levels will be forced to hedge. I mean, they could be taking taking the plays down to 5100 before they offer up a bounce. So I could see price just working its way down there, and that's going to be something I'm watching. So in between, obviously, there's some support resistance in between. It's kind of no man's land. But if we're going to see some levels get tested, some support, some reflexivity in the market, we're probably going to hit 5105, 5100. and just have another kind of nasty day. I looked at the heat map this morning. I think 70% of stocks were down in the U.S. So right now we've got 74% of stocks down. You can just see red everywhere on the U.S. map. Netflix is a little shiny green for the day. Netflix was up to about $1,000. Now it's fading slightly. I do have an earnings plan Netflix that I took last week. We had earnings on Thursday at the close. There's no way to trade it until this morning. So price is really right where it left off. I've given myself a couple weeks on this trade. We do have earnings this week. So thought this was interesting. These are forward valuations for the S&P. Key levels. Okay. Key levels and key valuations. Right now, like 2022, the valuation for the S&P went down to a 15 times earnings before we bottomed in September. Okay. Large cap still trading at 19 times, mid cap, small cap trading at 13 to 13.9. I just wonder if this is going to be a continued forced rotation or at least pressure on the large cap side to push this down into, a multiple that makes it a little bit more attractive to kind of be worth taking on that risk. But what price is that? Probably not the lows at 4,800. I think that's my biggest concern is that I think right now the market can still hang in there. The market is like hanging in there. Maybe if you're picturing, you're hanging on the edge of a cliff, okay, and you've got 5 fingers. Well, every day this thing goes lower, you got one finger that's getting stepped on. Goes lower again, another finger that gets stepped on. Eventually, if we do like a severe break here, that's not a bear trap. If we do some severe closing below 4,800, that's all fingers getting lifted, and that's falling to maybe the branch that's 30 feet below you, and then you hang on to that branch. So the market's not going to be bear market in a straight line. It's going to be kind of wild and crazy. But I think right now this is going to be the Trump put level. Potentially a bear trap could also fire up the Fed put level. I thought the Fed put would be way lower. I truly did. I thought the Fed come to the rescue would be like 40, 35, 40, 45%, because if they waste quantitative easing here and the market pushes lower, it's for the first time in a long time, it's almost like a worthless Fed put, So anyway, I'm not going to sit here and say like we're going to go lower, because this was such a disruptive move from this low to high that realistically this market could go like it did here, failed at the high. It could come all the way back down to the low again and fail. And we are getting no real traction or direction outside of this, just a big noisy area, right? And I could see the market, testing bear trap and then finding some traction to the upside. I just think the most important thing is we keep saying this. It's like you just got to survive. I like literally. It's like I'm okay taking small losses. I'm okay managing risk, and that's probably the smartest thing. I know that I'm gonna have to, eat some red in the interim. If things aren't working out, I don't need to sit here and hold crappy trades. Everything I'm trading is defined risk. I do have a trade that's going to be interesting this week with Tesla. Tesla trading at 225. I did get assigned Tesla over the weekend. It was another ratio, or it was a 1-1-1 trade, which was a 265, 260 by 255. I got assigned at 255, and here it is. So assigned working on repair. I talked about this last week. I wasn't sure exactly how I'm going to approach the earnings play. So what I have is I just bought a 150 put for 3 contracts. So I have 100 shares of Tesla, but I'm showing, basically what controls 300 shares. If we have a bad earnings report, I want to be able to protect some additional profit to the downside. So 150 put I know is way out here. Okay. However, if we have an aggressive push on Tesla to the downside and we hit, 180 or so, or 175, let me actually calculate out what this expected move would be. So let's go option slam. Let's go to Tesla. Let's see what the average move is. Okay, average move on Tesla is around 14.4%. I would say safely around 11. 11 to 14%. We have slightly higher volatility. Let's see how many times. So average is I'll say 14%. And we're trading at 224. So 14%. times 224. We're looking at about a $31 move on Tesla. So if we go according to the earnings here, then Tesla potentially has the ability to get down to like 190, 190 to 185. I'd say on the high end. If we have just a monster move, then you can double that, and that would be similar to what you saw with United Health Group, which was what should have been about a 7% move. All of a sudden, blew out to like a 20 plus percent move. By the way, that trade I took on UNH did get filled last week. We talked about that on I think Wednesday, Thursday. I put in a debit here. It's a debit spread of $4.60. It got filled. So there's $5.40 of potential upside. This is a May 16th expiration. So all I'm really looking for is if price just heads back up, I need this to be greater than about 455, 460 for profit. So let me set a chart alarm back up here. I'll go 460, check debit spread. So chart alarm set there. So see if there's a gap fill in any way, shape, or form with this pretty strong support. This is 2-year support on UNH. But anyway, let me get back to Tesla, crunch some numbers. So the expected move is around 14%. How often does it get there? Let's find out. Within about 8 days, 8 to 13 days, let's check on Tesla. So how many times does it get to 14%? Day 13. If I did an expiration for not this Friday, but next Friday, Tesla. So if I go out to not this Friday, but next Friday, well, I guess if I did an expiration for this week, that would be anything less than 8 days. So I can do that here. All right, so I'll take 8 days. So how often does it get to 14% or more in 8 days? Doesn't get there, does get there, doesn't get there, does get there, doesn't get there, gets there day 8. Doesn't get there, doesn't get there, does get there. This is, and again, this is pretty common with a lot of earnings, is it's sometimes it does, sometimes it doesn't. It's literally 50-50 right now. So it's a bit of a coin flip. Doesn't get there. 14% doesn't get there. Doesn't get there. Doesn't get there. So honestly, most of the time it doesn't get to the expected move. So if I were to pick, I mean, I've got 4 times that it gets there. So 4 times it gets to the expected move of 14%. And this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. 11 times that it doesn't. So in the last 15 earnings, 11 times it has not hit the expected move of 14%. Now that might change here after 13 days, but if I went to this Friday's expiration, there's still a chance. Like there's an outlier that yes, you could have a trade not work out, but a trade that actually could be interesting for this week would be selling premium on Tesla, going to Friday and seeing, okay, it's trading at 225. So if I were to sell the 225, I mean, the plus minus is about 24 points. We did the numbers here. I mean, I'm expecting 14% on a 225 stock. I mean, that's a $31 move. So this is, it's just not quite offering. Like for me to take this trade, this would have to be offering me about $30 to $32 credit right now. And it's not. It's offering me what this plus minus is here. Now the IV is 63.2. If I wanted to take on any risk here, 225, let's say to 255. Let me flip this. 225 to 255. So I can buy that wing. And then the 225 to 195, I could buy that wing. So basically, I've got a plus minus 20-point move in order for me to make money on the trade. Now, the trade is aftermarket Tuesday, which means you have Wednesday, Thursday, Friday to manage this trade. What this looks like is if I took this trade, you would have a potential profit trap and you have potential risk. And so if price goes plus 20 points up or it goes minus 20 points down, you're taking on some risk. Now, that risk is about $1,000 to potentially make $2,000. So if price stays inside this trap, which means it doesn't go plus 20 or go minus 20, then that $19 you collect on the trade can trade easily for $18, $17, $16, $15, $14 debit. You can turn that into a nice win. Okay. But the outlier risk is maybe it's one of those situations where Tesla goes way beyond and I don't know. So anyway, my point is I don't mind having shares of Tesla. Fundamentally, the fair market value is probably around 170, 175. Um, this has been one of the worst Mag 7 stocks in a while. If it's even in Mag 7 anymore, maybe it is, maybe it isn't. I think it is. It's certainly top 10. Market cap is 726 billion. I mean, I don't even know. This is a $1 trillion company that is lost, 2 to $300 billion in market cap. So anyway, long story short, I'm doing the math on this. Here's my spreadsheet, and this is the trade. So if I, zoom in here. So that was the trade assigned, 247.95 is my break even. I added a May 9th 150 long put. All I'm really doing there is I'm adding multiple contracts. It cost me $1.60 debit. If that $1.60 debit trades for, $5, $6, $7, $8, $10 credit, I'll take the profit. I'll lower my cost basis probably down to like the 230s, and then I'll just start aggressively selling calls. It might take me a few weeks to get out of it, but it wasn't more than like 2 weeks ago. I took 2 to 3 weeks to flip Tesla for like $7 grand. I'm going to try to do the same thing. So the story will, continue. It's not done. And I guess best case scenario, and this is kind of, wishful thinking, but best case scenario is that I've got the 150 put, which is way down here. Okay. Best case scenario is Tesla just murders it on earnings, and it rips up here to like 260, 265, 270. I will immediately take profit. I will dump my puts, and I'll take probably somewhere between, $15 to $20 a share and just get out of the trade. And I've got this on 4 accounts. So it could, I mean, if Tesla somehow leads the market to believe that there's good things happening, and it doesn't just look like it's along with everything else, which is just negative news, then I didn't want to cap the upside. So I did debate on this last week whether or not I wanted to keep a collar trade running. But I don't want to have the collar trade running, because if I sell a call and I buy a put, I want to make sure I have enough time on the put to take the profit, and my credit would have been like $1 or $2. So I own the break even at 247. I lower by $1. I still have downside protection. It's just like a kind of a longer window than I want. So I'm going to take my chances on a put. If the put pays me, great, and then I'll just start adding covered calls, and I'll kind of wheel my way through it. But I'll go week by week by week, because the premiums on Tesla are pretty solid. So we'll see what earnings gives us, and that's it. Like, pretty straightforward. So what are your thoughts on? Yeah, I know it's falling. I think this is just something to be careful about. Look, gold and dollar are probably the closest correlation right now as far as inverse. So if you go to gold, right? So gold is up almost 3% today. So GLD is up almost 3%, right? Impressive. I measured this out. The same stretch we had with capitulation from 2009 to 2011, when we got up into the top before gold crashed, gold was heading straight up. The dollar was heading down. So I could see something similar happening here. And look, this has been now like weeks and weeks and weeks of saying the same thing. Gold has been a great trade. There's no denying that gold has been a great trade. Okay. But I still firmly believe that gold is going to find this 144 to 200 moving average, and gold is likely going to be, if we get up to this crazy capitulation move and then gold crashes, or at any time gold just pivots and turns hard, I think there is a correlation between what gold is doing and the dollar. So if gold continues to push higher, that's probably going to keep pressure on the dollar to fall. Right now, the dollar index, technically we're oversold. Let me go to a bigger workspace here, get rid of some of these. So keep that one off to the side. Watching some levels there. Heat map is just blood in the streets. Keep that for fundamentals. Let me put in my macro workspace here. So gold. Gold on the weekly. This is a weekly chart, by the way. Gold on the weekly. Way overbought. And this is a RSI 20 period or 21 period and 14 period. Again, it doesn't mean anything other than, yep, it's overbought. But this doesn't mean that the top has to be in immediately. In fact, just looking at this workspace with all the technicals here, MACD is showing additional convergence, meaning that there's still momentum here to push. Histogram is still making higher highs. Our signal line was back here after a dip, which would have been, late last year. We had this little crossover, still had a signal line move that would have put you around a buy around 2,700. It's not a bad trade, obviously. So anyway, money flow still comes in. We have overbought conditions, but this is probably like one of the better safe havens running. Dollar index, not awesome at all, right? I'm cautioning traders to sell the dollar when you're already way, way, way behind the move, right? I mean, when we started talking about selling the dollar, it was on this bear flag. Okay. And when I say that, because looking at all this support and coming up and sweeping all these highs, I thought if the dollar's going to hold here around 106, that's the chance for the bulls to step in. And they never did. And so as soon as the bears flushed them lower, and this is all of a sudden, okay, we're probably going to come back and revisit the low when this broke out in September. You had a bear flag right there. That was your best trade on anything dollar. You want to go long euro dollar, long pound dollar, long Aussie dollar, long New Zealand dollar, short dollar CAD, short dollar Swiss. That was your trade. Now this is just a run. So it's running. It's oversold. Could it go lower? Sure. To where? Well, I've got about 97 on the DXY. That'd be a symmetry move. So high to low, lower high to lower low, there's symmetry. Okay. If the dollar bottoms out here, sure, I expect to pull back towards 100 to 101. Could the dollar be longer term bearish? Yep, absolutely. But I don't want to call the bottom. I think it's too early to get scaling in yet. I think it's too early. But if the dollar pivots hard around this like 9,700, maybe capitulates through it a little bit towards 96.50, 96, whatever. I wouldn't be shocked to see the dollar make a little bit of a move. If the dollar starts to catch a bid and head back up, I do expect gold to turn and drop. Okay. Just as not a great time to long gold right now. I agree. I mean, and this has been the last couple weeks on gold. Okay. I've said the same thing for the last couple weeks. I can't justify buying gold. I'm already in gold. Thankfully, I'm already in gold. Thankfully, this has been a trade that's been running for the last couple years. Okay. But I can't justify going long gold right here. These are terrible prices to go long gold. These are terrible technicals to go along gold. What you are getting in right now, and there is a quote, like I think this is a George Soros quote, but show me a bubble, and I'll show you a trade that I want to take, something along those lines. Like, I mean, gold right now could be getting into a bubble where this just stretches, and it doesn't have to stop here. This is just a correlation that I pulled back from 2009 to 2011. But if we go just where all the technicals seem to be breaking, and this gets everyone's attention. It's already getting our attention because we watch this every day, but it's not necessarily mainstream media yet. And until you see like all the retail crowd that's like, look, the stock market's red, the S&P's red, everything's down for the year, I'm just going to put my money in gold. By the time that happens, you might get a little bit of extra, run to the upside, but that crowd that gets in that late is going to be left holding the bag with and this is not an exaggeration, probably a 20% correction in gold. Okay. Because if we turn right now and find a 200 moving average, that's a 20% correction. If we run higher in gold, another, 10 to 11%, we have another correction. That's almost 28%. So I'm just going to, I'm going to make a little proclamation here for 2025. Gold is going to be another weird asset that has like this great run, and we're going to have like some type of break, like some correlation between gold, the dollar, maybe the U.S. bond market, something is going to break. And gold has been a great trade, not just as a safe haven, not just as an inflation hedge, but also as an asset that the whole world wants. And interestingly enough, Bitcoin's looking encouraging as well, which is, I mean, again, I was completely wrong thinking that, in order for Bitcoin to go up, we're going to have to see the S&P and the NASDAQ go higher. It is for now showing that there is some resiliency here. Now is gold at all-time highs? Yep, and it's still running. Is Bitcoin anywhere near? Not even close. So, to really prove that, hey, Bitcoin is a legitimate alternative now, and it's being treated as such, and it's being priced as such, then Bitcoin probably has to be traded back over $105,000, $106,000. If Bitcoin goes sideways like this, if we're going sideways on Bitcoin, just expect more noise. Okay. The S&P, because we have such a large swing between that low of April 7th and the high in April 9th, that 13.3% swing in the S&P, all this movement can be noise, right? And we are just left with like head spinning volatility, intraday swings, gaps of 1 to 2%, 100 to 200 point swings. It's like these are insane. These are really insane. This is not like a common environment for day trading. But man, the markets are just moving. So anyway, summary is this: gold is treating every trader great right now. If you're long gold, you'll love it. It's probably one of the few highlights of the year, and maybe enough to help you fight this battle that the market's been giving us. I'm still not taking profit on gold yet. Okay, if gold wants to get more ridiculous, I'm gonna lean into the ridiculousness. Okay, because if it doesn't get ridiculous and it pulls back, then sure, I'll wait for a correction. If I get one, I'll start scaling back in. I think we can still go higher on gold. But if we're going to talk about gold bubble, then gold is just going to start ripping higher. It's going to look like every future chart that's broken over the last couple of years. Coffee did this, orange juice did this, lumber did this back in COVID, cocoa did this recently. Hell, copper did it this year. Copper was up to all-time highs and came all the way back down, like a 20 to 30% correction in copper. Now it's back up off those lows, but that's the type of volatility that we've got got happening. It's not normal, but this is what's going on. So copper's still hanging in there. I've got an expiration in 3 days on my copper trades. This should be mostly in profit. So let me take a look. Copper here is up now, about $1,200. So hedges looking better. So I'm just obviously prices down a little bit. So my hedges are working okay. This October hedge, these are up. These aren't up a ton. 25%. Okay, other hedges doing better. I've got this micro S&P is up 110%. My ES trade's up 123. This is up like 300+% before, but both of these had the potential to be like up 500%. This one could be up like 4,000%. Keeping those hedges in case I need them. So if we do come back down and revisit the 4,800 lows, I want to make sure I have that protection. So all right, thoughts on gold. I know it's a hot topic every single day in these sessions. Everyone wants to know what gold is doing. Look, it's been a great trade. I can't in good conscience justify buying gold at these levels unless you're like short-term trading, which could be like intraday scalping, but it's still not my favorite. I want to enjoy the bubble if we're getting one. If we're going to get a bubble, I'm going to be in it. I've got GLD, CEF, PHYS, XAG, SLV, like a lot of stuff, right? I don't have any gold futures or silver futures running right now because I was waiting for dips. I'm not getting them, so I'm just running with GLD, SLV, and then some other correlated ETFs. But we get into this area, I'm moving stop losses on all of those assets. Okay. So, what would be and I have no idea, right? But if we bubble up here towards like 3,800, I could see between 3,800 and 4,000 being like the bubble's going to pop. Currency strength on the day. Swiss is probably on the top of the food chain. Interesting. New Zealand dollar on top. Swiss is fading a little bit. Dollar's weak, CAD's weak. Okay, fine. Just hang in there. But that's gold. So if we bubble up, I think the bubble burst. I'll just, like I said, I'll say this. I think gold's going to have a 20% correction this year. And how it happens, well, it could be starting now. It could be starting with a bubble that pops, and then all of a sudden, everyone that jumps in late is going to be left holding the bag. We need to be smarter than that. If this is going to go another 5 to 10% to the upside, do not let those profits slip away. It's not worth being greedy when this thing is already overextended, already overbought on multiple time frames. It's to me just a matter of if and when and what is the pivot. It could be the dollar, it could be the bond market, it could be a Fed put, it could be a Trump put, Fed put, it could be a bunch of things. All these are kind of in limbo for the year, but those will be directly impacting a lot of assets. If there's a Fed put, the market might rip. If there's another Trump put, or the U.S. government with fiscal policy, who knows? But it's going to be something I want to be able to act upon. Okay, all right. So SP's down. I'm going to keep an eye on that butterfly for the morning. So right here, just watching that chart alarm, we're down to 51.63. We're starting to make some fresh lows. My blue lines represented my trade this morning. I closed out of that trade for a small loss. Looking at the butterfly, see if I can pull in, like a little 100% winner. Maybe I can, maybe more, but we'll see. So keep an eye on that one for the day. We did gold. Let's do silver. Dollar index. Dollar index is oversold. I've got symmetry. If you want to write this down, symmetry around 90. Well, we got a 618 extension. That's never mind that one. That's not what I want. Let's go to let's just go symmetry here. Let's go to like 96.30. So I'll say 96.50 to 9600 would be a good technical bottom for the DXY. If we're going high to low, lower high to lower low, I could see the dollar pivoting off that symmetry, and then it's pretty clear. Like if we do bounce here, where I'm projecting that symmetry, if we do bounce here, then it would make sense that we bounce back into what is all this multi-year support to become resistance. And if the dollar is truly going to head lower, then there's your fifth wave, right? So wave one, all this is multi-year. Wave two, okay, wave three is what's now, very aggressive. And this is an impulse wave. And I'm not an Elliott wave person. It's just pretty easy to count, three waves. Three waves and five waves are not that easy to, or not that difficult to count and see. So if this is wave one, all this is wave two, this is wave three. Four is usually a brief pause or pullback. And then five would be the slower behaving continuation to finish this move. But that's more long term. I mean, we could be talking dollar index down to 90, but it might be, a year or two away. Okay. So anyway, I think the dollar could go a little bit lower before it pivots. So that makes me think if you're looking at dollar crosses, look, euro dollars had a fantastic run. Pound dollars had a fantastic run. Aussie dollars had a fantastic run. New Zealand dollars had a fantastic run. Dollar CADs had a fantastic run. Dollar Swiss had a fantastic run. Dollar Yens had a fantastic run. All of them. If you're in those trades and you're favoring a weaker dollar position, so you're long euro dollar, you're long pound dollar, right? Trail. Move your stop losses, trail. If it wants to keep going, trail it. All right. Because my concern is that this turns and this pivots, don't get back those profits. So even one candle, trail it. But I would not take fresh positions and be short the dollar right here. I would not also bottom pick and be long the dollar right here. I think that's also a really risky trade, right? Especially in Forex when we have the risk of flash crashes. Typically, a flash crash is in the direction of the trend. So if this is going to trend lower and it flash crashes, which, by the way, I've never actually seen a flash crash on the dollar. It is one of the most liquid currencies in the world. I've never seen the dollar be the catalyst for a flash crash move. It's happened in the Japanese yen. It's happened in the Aussie. It's happened in New Zealand. It's happened in the Swiss. It's happened in the pound. It's happened in the euro. But I've never seen the dollar index be a reason for a flash crash. So maybe this is the year. Because certainly the dollar has been one of the bigger storylines, and dollar super weak. Okay, oil. Um, I think at best oil is kind of range bound right now. I don't think oil. I listened to this interesting podcast this weekend. Somebody is a macro guy thinking that oil lows are in. There could be some indecision in here, which I agree. I mean, I think indecision is probably what we're going to deal with. I don't know if this is the low and all of a sudden oil is going to rip back up to like 80. I don't think that's the case. But I also don't think that oil is just going to be doomed. I think there's too much riding on fair prices for everybody to operate and still have some margin or still maintain some type of break-even operation, as opposed to the margin pressure that happens when oil is lower. It causes all sorts of problems for like the global economy. Like everyone that is commodity based or energy dependent, those countries struggle big time if oil prices are too much lower. Even the U.S. I mean, even with the U.S. The Keystone Pipeline or anything through Canada, Alaska, whatever Trump has in mind for deregulation, I still don't think that those companies want to see prices above like 55 or 60 bucks. I think below that, it just cuts into the margins. They can't turn on, turn off rigs willy nilly. Like it has to be. It's like a year. It's a year to 5 year commitment. It's billions of dollars in commitments, and it just has to be super frustrating. Everything about these markets right now, everything about business in general and making decisions for the future has to be incredibly frustrating right now. It really does. So I don't envy any business with all this uncertainty. But where do I think oil is going? Well, here's what I would consider. If oil comes back down to the lows, I would consider a defined risk oil futures trade. In case that bottom is in, I might take a trade there. So I'm going to keep an eye on this one. I don't really have a trade in oil right now, but if we come back down to the same lows around 56, I will probably look at a bull put spread on CL for oil futures, or I might put in a 111, which is a buy put, sell put, and then probably define that for a four leg trade. I try to make $200 to $300 income for maybe a $500 risk with a profit trap, or if I go a debit spread, I'm looking for asymmetry where I can risk maybe $100 to make $150, something like that. But to me, it's like it's in the middle. I could try to sell here, say it's in the middle, and maybe that's fine. But I'm going to take in maybe 10 cents on the dollar, 20 cents on the dollar. I don't really love that risk compared to reward. So I think I'm just going to look for if the bottom holds. See if the bottom holds. Let me put this chart alarm up by $1. If the bottom holds, I'll take a stab at it with a higher reward to risk. Natural gas. Before we broke above the 200 moving average, natural gas was called the widowmaker, and I'm now experiencing why. Because what started off to be a very encouraging position, which is still out to 2027, but it's reset, more than halfway. So this low to this high is now pulled back even deeper. So we're back below the 200 moving average. This might just reset all the way back down to the lows again, which kind of makes this position crappy for me. Gold we just talked about. Okay, silver responding nicely. I'm hoping that silver plays catch up in a big way. You look at silver versus gold. This is nuts. I mean, we broke out of a multi-year range. Gold is outperforming silver in a big way. I think it's 2, if not 3 standard deviations above the norm. So gold is being treated differently right now. Gold is being treated like the king of the safe havens, the king of the uncertainty, whatever. It's the anti-dollar trade right now. But silver is poor man's gold and might actually offer up a slightly better reward to risk, or even something I can measure, which is if you go to a silver chart, you can still see that it was as high as $47, $48, and we're trading right now at 32. So gold at all-time highs is like, how much higher does gold go? Nobody knows. I can't call a number. But on silver, it's like, well, we've been 47. We've been to 47. I think we could get there again, and that's a heck of an upside to measure and look at. Okay, so we'll see. But I like both, and literally, for like gold and silver are both performing really well in the portfolio, and I'm going to keep riding those out. Okay, Bitcoin, like I said, looking a bit more impressive considering the state of the market and the fact that there's a lot of risk-off trading, but Bitcoin is still holding resiliency. I saw over the weekend that I think MicroStrategy bought another freaking 6,000, 7,000 Bitcoin or something. Not that matters. But I mean, the fact that it's up today while the markets are down, kind of interesting. Is it, again, I'm not going to speculate on like, oh, it's showing that it's finally depegged from the S&P. It's not necessarily true. I mean, I think that there are flows coming in, and honestly, because of BlackRock and those approved ETFs, I think this is showing a level of resiliency because most of the money that's coming into Bitcoin is not super, super speculative. I think this is now, from this area here, this has become what is more of an allocation asset to have, the conversation. If you're a financial advisor, having the conversation of having 1 to 3% exposure in Bitcoin. Well, okay, well, if you're going to put somebody in a 60-40 portfolio and you're watching 60% perform like garbage, 40% perform like garbage because stocks are down, bonds are down, and you're talking about a 1 to 3% allocation to Bitcoin that's not going anywhere, it's not going up or down, like that is proving to be a pretty good investment. Well, if you've got another 1 to 3% in gold, that might be hanging in there. So point is, for US equity exposure, 60-40 sucks right now and probably will continue to suck for a while, maybe forever. But this Bitcoin, when this all started to happen, this became a much more of a stable outlook. And I think with BlackRock in the ring and, kind of being pro Bitcoin, pro crypto, obviously they benefit from it. ETF is IBIT, that's theirs. But I think that's why you're not seeing a lot of dumping. It's like a 1 to 3% exposure that's actually resilient right now. is people are willing to hang on to it, not dump Bitcoin, because they also, having made this run, maybe taking some profits there, reallocating, because that 1 to 3% exposure is probably showing 3 to 6% profit. Cool. Well, then reallocate it down to 1 to 3%, and you still hang on to it the same way you did before, as it was accumulating. So this could be an accumulation phase. If we get another run, we'll see this rotation. We'll see a lot of this behavior. But I think that's why Bitcoin is hanging in there, like not really reflecting the risk off rotations we're seeing in the equities market right now. Make sense? All right, Ethereum, I wouldn't touch that one. Interesting enough, MicroStrategy also staying resilient. I might actually flip this one. This is coming into May. So I do have a 310 covered call. This is going to make me, if it stays above 310, hopefully around 16 grand. So MicroStrategy could work out to be a really nice trade. It has taken a couple months, a little bit longer than I cared for, but we did hold really nicely at 240. My collar trade at 310 by 240. I'm still watching that closely. I also, if it's way above, if we're trading, MicroStrategy's back up to like 350, 355, I might look at another 1 week roll and grab another $2, $3, $4 of income if I can, and try to beef up that bottom line. So this is another kind of highlight where, it's having the cash available, it's repairing the stock and the position, using options aggressively, and ultimately, adding some profit to the bottom line. So hopefully I can do without Tesla. If Tesla, like last week, or the week before, flipped it for like 7K. I'm gonna try to do the same thing again for another 7 to 10K. MicroStrategy, 15, 16 grand. Like there's some highlights with some of these positions. Coinbase, I don't think I have any other Coinbase positions. I was able to successfully get out of these ratio spreads with winners. I don't think I have any Coinbase left. I don't. Good. So I'm good with Coinbase, just not being exposed to it right now. But MicroStrategy, I've got it. Bitcoin, IBIT, I have it. Copper's fine. Japanese yen making higher highs on 6J. FXY, this is the Japanese yen ETF. This is also, it's not a big profit, but it's up. This is another kind of partial hedge for me this year. FXY is up around 3 grand, $3,100. So should I start taking some profit in this one? Maybe. Maybe. I guess my question is, this is the Japanese yen is kind of the inverse of FXY. But if this is a head and shoulders trade, I kept talking about this potential support, right? If this is, look, if this is a head and shoulders, okay, and this is a wild and crazy move, but if this is a head and shoulders, let me box this in. We have a swing from high to low, and I'm going to be conservative here because I'm going to say this is my first low. If I went all the way down here, that's a crown pattern. So there's two ways I have to measure this. I'm going to take this swing, okay, and we break that neckline. We go horizontal ray right there. So I'm going to take the swing. This is going to be my head and shoulders measured move, and my symmetry is going to be just a little bit lower than that. We actually are pretty close to hitting symmetry here. So if we go a little bit lower on dollar yen towards like 139, I could see that symmetry bouncing, okay? If this is a head and shoulders trade, and this has been months in the making, this has been a wild trade since 2022. But if this is going to be a self-fulfilling head and shoulders, then what's nuts to me is we're talking dollar yen up to 162 that now corrects all the way down to 121. That's back below this correction here. That's coming all the way back down to when this whole thing broke out back in 2022. Right? So this whole move right here could be this liquidity run that is going to come back and rebalance this dollar yen all the way back down there. Does that mean I want to short dollar yen? No. What it means is I will stay long FXY. Okay. If this bounces hard, I don't think anybody's going to be surprised that it bounces back up. We just have this huge range between the dollar yen, maybe a huge range in FXY. I don't know. But if it breaks, don't be surprised if the Japanese yen offers a better safe haven than the dollar. And do we get into 120? Sure. Well, FXY at that point could be a much bigger trade. I'd probably double my profits. So if this is a head and shoulders, and I'll do the same thing here. If this is a head and shoulders, I'll box this in. So low to high swing. And if we break that neckline, FXY heads to 75. $74 to $75. So to me, it's worth hanging on to. Again, where's the inefficiency? All the way back here in 2022. So this is a head and shoulders pattern, and we break the neckline. Path of least resistance would be bullish until we hit that measure move. And it could fill all the way back up here towards $80. But, again, not trying to be super greedy. If I see the technical measurement, I'll end up taking my profits there. Okay, something to watch for. German DAX. It is fine. I'm looking for a cup and handle because it was such a sharp decline. So low to high, maybe a little bit of pausing here. Risk appetite returning would be good for the DAX, good for the FTSE, good for everything. Right now, there's just not risk on. Everything is gold. Like it's gold. Bitcoin, you can throw it in. There's like, yeah, it's behaving a little bit different, which is fine. FTSE, same thing. Below the 200 trend line to the 200 moving average, I don't love it. FEZ, still watching for a cup and handle. Argentina, probably some chop. I'll see if I can get another pullback towards the 200. Copper that's China actually. I was looking for HG. China, looking for a cup and handle. It's pretty strong support. I could see risk appetite if it returns to the market. China makes new highs. I can see a lot of non-US related indexes this year, DAX, FTSE, HSI. I can see a lot of those making some fresh highs. I'd like to see Brazil, Latin America do the same thing like non-US. We'll see. But, to me right now, it's like China's not breaking down below 18,800. So I think it's still structurally pretty bullish. It's definitely a risky trade, but right now technicals are holding. EWZ is Brazil. If we break above the 200 moving average with my chart alarm right there, I'm watching. ILF Latin America, MAG 7. Back down to some fresh lows or getting back down towards those lows. I may look at a trade on MAGs where if we revisit the lows again, I might be willing to take a trade here. I can't imagine that MAG 7 earnings are going to be so bad that this is going to justify like just fresh lows. I could be wrong. Maybe this is one of the biggest storylines of 2025, which is, MAG 7 is down 33%. It's been the biggest contributor to the markets dropping the way that they've been dropping. You're shedding a lot of market cap right now. But I look at the technicals on the weekly time frame. My 14-period RSI is hitting oversold conditions. If we hit some fresh lows in price, this is one thing I'm going to watch. If we hit fresh lows in price, I'm going to look for some type of divergence on MACD and some type of divergence on relative strength. I'm going to look for some type of money flow indicator to show a higher low. That might be a very cost-effective position to get long MAG 7 without having to get long individual stocks. So that could be a trade I'm interested in. I'm going to set a chart alarm down here at 39 at the lows. I'm going to look for some divergence to see if I can scoop up some inexpensive MAG 7 exposure. Apple, out of this one with the ratio spread for profit, that's good. Amazon down to 167. I'm going to check some puts on Amazon. I have some ratio spreads as well. I'll be watching out to the, it's summertime like June and December. AVGO not touching. Google 150 is a big line for me in Google. Coming back to these correction levels in 2024. Yearly moving average, this is a 5-period yearly moving average at 135. It gets overblown. I'm going to look for some divergence on Google as well. Meta might be a long-term trade for me back into the 450 to 400 zone. It's still, I won't forget 2022 Meta. 2022 Meta, it was down 75%. So just for this thing to say, well, 48% seems like enough. I mean, is it though? I mean, here's previous highs. I'd like to say, yeah, it's a good spot to dollar cost average into. The nice thing is whatever that investment is, we get to all-time highs on Meta. It's almost 100% return. You don't see a lot of those trades line up, so it does get me pretty excited, but that's not necessarily the bottom. I like the trade. I like the idea. Fair market value. Let's see what Meta is fair market value-wise. Meta. Snowflake is good. I mean, price to earnings is actually not super expensive compared to the other Mag 7s. Fair value 870, 887. And if we're trading at 450 or 400, I love that trade. We were as high as 742. So I think I'd be willing to kind of hold a position in Meta, see if we can get back to all-time highs, hit $1,000 or so. Great investment. But dollar cost averaging, you're willing to sacrifice. A lot of trades here on Microsoft. I think I'm done with this. I think I got out of Microsoft with all wins on. Yep, I literally just have fractional. Oh, that makes me feel better. I put in a bunch of aggressive ratio spreads, close for profit, close for profit, close for profit, and that's it. So I do have some dollar cost averaging, and that's fine. But I'm just gonna hang in there. So these are all done. Good. Netflix. I'm gonna set a chart alarm towards this like 10:45 handle. Okay, and then a chart alarm down here at 9:15. All right, just want to see if it gets to those expected moves. Nvidia trading below $100. Nvidia not looking good with any. I don't know. There's the optimism is just kind of popped. Basically, they're writing off like $5.5 billion. They're taking potentially another revenue haircut of $18 billion. They don't really make any chips. They design them and then they have everyone else make them for them. So I don't know if Nvidia is going to be like the modern day Cisco, where it's just like, yeah, it was the greatest stock ever, and now it's 90% off the all time highs, or if there is still resilience in here and there's a fair market value at 115 to 120. I'm not trying to make a long-term case for Nvidia at all. I'm just trying to hold in there with, like, I sold a bunch of premium at the 65, 60, and 65, 60, and $55 puts. If those hold for May, June, I'll make money on those trades. That's about it. I'm going to set a chart alarm up here on the 130 handle for a collar trade. That's about it. See if we break any lows. That's 85. So just surround this with some chart alarms. Tesla 224 earnings tomorrow. Berkshire Hathaway fading off the highs. I wanted to short this one, but I mean, based on what we saw Wednesday, April 9th, if any positive news hits the markets, you can see that this market is just desperate for something good to happen. It's not getting it, so it's why it's like this slow, gappy, bleeding to the downside. But if the market gets another kind of Trump put or another tweet or another something, all it takes is U.S. and China figuring out the trade war. Boom, market fixed. It's like it's so dumb that that's how easy it could be, but until that headline actually hits, this market is just pricing in a bunch of angst and anxiety. Bonds. Okay, here's another concern, legitimate concern for the U.S. Bonds are down, right? Long-term bonds are down, short-term bonds are up. So you got 1 to 3 year up. You got 7 to 10 year mixed, long-term bonds down. So your yields, the 2-year yield is down, so we're trying to bring the short-term yield lower. Your 10-year yield is actually going higher. So let's take a look at your 10 and your 2-year. There's your 3-month, 2-year, 10-year. Here's the 10 and the 2. So your 10-year, 2-year is still disinverted by quite a bit and making higher highs. Your 10-year and 3-month is right back around the zero line. This is the borrow time concern that I had with a recession. A lot of businesses right now are already saying we're already in a recession. Nobody's saying it yet because it's going to take two quarters of GDP to go negative. But you're going to get the same thing as 2022 is like this weird rolling recession. So anyway, interesting how the short end of the curve is dropping, but the long end is rallying. So TLT is down. It wasn't that long ago, like literally the last couple of weeks, there was your kind of Trump put right there. Was a bit of the break in the bond market. So what happens if TLT makes fresh lows? Probably going to see some chirping out of Trump. You're probably going to see something happen with the bond market showing some resiliency. This combination of like what the bond market does compared to gold and the dollar, I would put those all in the same watch list. Watch and see how they behave, because I think that's where something's going to break this year. Is U.S. bond market compared to gold, compared to the dollar, the way those play out together is going to be something that it could really send reverberations throughout the entire market. Okay. All right. Let's get into some currencies and I'll let you go. So a lot of stocks, I mean, everything's red, 75% down for the day on the heat map. Oops. So we have 77% of stocks down in the day, a lot of red. It's one of those days. We felt it, we feel it. Is it down to the lows from April 7th? No, but it's not looking great. I think 5100 would be an interesting spot today. I'd love to see a big fat butterfly pay me 32 to 1 today. If we can settle in at 5100 by the end of the day, maybe I can turn a 30-cent debit into like a $3, $4, $5 credit, which wouldn't be all bad. But stocks are looking pretty rough right now. Let's go currencies. So Aussie CAD will start with, but currency strength. This was Thursday last week. Here is today. So we still have Swiss on top, Japanese yen, euro above the baseline. New Zealand, interesting, one of the stronger currencies. Bro. Think we have guests. All right. All right. Okay. And the dog's excited. Okay. So let's check currencies here. Aussie CAD. I'm still looking for that pocket to fill. I am long Aussie CAD. I still have pending orders all the way down here to 82 and 8100. I did get filled in this 86. I didn't go aggressive like 86, and then I went to an 84 and an 82. So I'm still waiting to see. I mean, it's probably not going to come back any lower. I would say if anything, this is a low, high, a little bit of a pause, and then we're probably coming back up. So I'm going to stay long Aussie CAD. Aussie Swiss, are we at some fresh lows right now? No. But watching, this is what I've said the last couple weeks on these Swiss crosses. I'm watching for a bottoming formation. The chunk of shares the chunk of positions I have, this is my break even. Okay. I have all these buy stop orders that I want to add back into this trade. But what I'm going to do is look to see if this comes back down to a low. I'll probably start stacking in some lower levels. I'll start stacking in some buy stops up here. I'll surround this position. But technically, this is what I'm watching for right there. A move back into this pocket, whether that's a 1 wave or a 3 wave or a 5 wave, it doesn't really matter. But that's target 1 for me. And if we have let's say this is a fresh low 1, 2, 3, 4, 5, then I'm going to move this take profit and all these buy stops and this break even. I'll just adjust it. I can be flexible on my plan when I'm dollar cost averaging into some of these Forex positions. But it's not enough for me to get aggressive. I need to be, careful of my trade size. So I will watch. But I'm watching lows. I'm watching for a bottoming formation. But I don't want to be stuck trading too large because we could certainly have some type of flash crash move. Aussie yen, be careful. Yen pairs, be careful. Oversold conditions on Aussie, New Zealand. I'm okay just hanging out on this one. If we come back into range lows, there's a lot of levels here that I'd be looking to dollar cost average into. So some of those big levels on Aussie, New Zealand, I would just buy and buy and buy and just let this thing be a range. It's a range from 1.00 to 1.14. It's a range trade for me. Okay, Aussie dollar, like I said, with dollar crosses, if you're already trading against the dollar, it's a profit protection time. It's a trailing stop loss situation. Like if you're long Aussie dollar, I bought in at 60.20 and closed it out here near the highs. Good enough. Okay. If I was still in the trade, I would have a stop loss right below these last couple of candles, and that's it. Like if it keeps going higher, move your stop loss again. But if it hits resistance and starts to pull back, don't be shocked. So take the majority of the profit. If it wants to go higher, give it a chance. If it doesn't, protect 80, 85, 90% of the move. Okay, CAD Swiss. This is another one that I'm going to actively watch for some bottoms. Okay, we're right back down to these same lows. This could also be heading lower, but if it's heading lower with divergence, I'm looking for a pricing pattern. I'll move these buy stops down to some type of buy stop level above current price. I'm considering maybe a buy trade down here, a market trade, or I could put a limit order at 5750, 5500, maybe. But again, mindful of my break even, not getting overly aggressive, but just going to continue to kind of work my way through it. Yen crosses. I don't love the yens at all. Euro Aussie. This because of the way this one behaved, I mean, we could have high, low, lower high, lower low. This could be Euro Aussie, Euro CAD, Euro New Zealand. Keep an eye on those technicals. Line up the higher time frame, shorter time frames. Euro CAD. I talked about watching for confirmation on a smaller time frame. I don't know if you're getting it. If you're watching, wait for confirmation. Don't force a trade here though, right? I just don't know. I mean, there's a lot of overbought conditions. There's some divergence. I could see this below this candle or this candle heading back down to the same range lows, but again, not interested in calling tops or bottoms here. Euro Swiss still kind of hanging in this multi low, this 9200 low. We could have some type of move back into like 9,000. Maybe that'd be really ugly if it happened, or we just hold the lows, right? We hold the lows right in here. Maybe it holds, maybe some divergence, and then we get a bullish pattern. I'm looking for a 5-wave move out of this. Again, buy stops. I'll move these lower, either buy limits or market orders if we're back at fresh lows, watching for a bottoming formation. Euro pounds, no trade out of this one. Once we hit the 200 moving average, I'm just letting a robot trade this one. Euro yen, no trade. Euro New Zealand, I don't know. If it just slides all the way down, that's fine. I'm not chasing this thing. I was looking for a trade to offer this up. If we go high, low, lower high, lower low, just a little swing trade. This could be a really nice swing trade, actually. Look at like the 50618 retracement, stop loss above, go after a 127. That could be a good swing trade. Euro dollar, same thing. It's making higher highs, move your stop losses. If you're long euro dollar, which I was long here, okay, close it out at the highs, at resistance. That was good enough. Now that it's higher, if I was still in the trade, I'd be long. I'd be moving stop losses, moving stop losses, moving stop losses, and just letting it trail. If it wants to go higher, let it go higher. Trail it. But I'm not long anything right now, euro dollar. I think this trade is already, I mean, my gosh, from 1.02, I mean, we've already had a 12 to 1,300 point move on euro dollar. That's a big move. Euro dollar's not normally that crazy. So the nice thing is structurally, I mean, even pulling back to this level still offers some buy opportunities. If for some reason it just stays, bullish, trail it. But I don't think we're going to like 120 without a pullback. So it's too late to buy. It's too early and too risky to sell. So if you're long, which you should be, if you're lining up any confirmation, you're long already, but just trail. That's it. It's not that hard. Pound Aussie, I'd stay out of that one. Pound CAD, same thing. Just be careful. Those are super high volatility. Pound Swiss, I don't think the pound Swiss is a terrible trade. It's just high margin. Just be careful on this one. But I think that this trade comes back to fill his pocket. I think we have about a 400 pip trade that's pretty high probability, but you got to be prepared to buy it here and be prepared to take this down to a flash crash low at 102, maybe even down to parity, which would not be fun because not a lot of traders are going to jump into something that's like, yep, Chris talked about an 800 pip risk. Most people are going to puke if they see that. So you got to trade it small, but I think the upside at 113 is pretty good. Okay, pound yen, no trade. Pound New Zealand's, it's already fading. Maybe a dip at the 200, but no trade that I like. Pound dollar, same thing. And I mean, it's ripping up here, right? I mean, bar count wise, we're now at probably 11 bars. 1, 2, 3, 4, 5, 6, 7, 8, 9. We're at 10 candles in a row, all bullish. Another reason I think we could, start to stall, but this is a nice candle, move a stop loss, trail today's price action. If you're long pound dollar, it's a great trade. I wouldn't short it, but if you're long, trail your stop losses and get knocked out with some good profit. New Zealand CAD filled the pocket. That was an easy trade. Leveled in here around 8,000. Now it's up to 8280. Let's see how high this can go. I think it's a big range. There's a low, there's a high. So low down here, high up here. New Zealand Swiss, similar to the other ones. There's my break even. I'm going to move these buy stops lower. I'm just actively looking to see what type of bottom formation I can plan. New Zealand yen, no trade. New Zealand dollar. Into some open space. I certainly got into this one early. Had my levels, got out near the highs. This was a break even. These were profits. It is what it is. I didn't get filled at the 50. What did I put in here? I should have just bought the damn thing at 5,500. It's okay. I did Aussie dollar instead at 60.20. This was fine. So Where to go from here? Well, a pullback. We get a pullback, we go higher. This is open space back to 63, 6,400. But wait for a dip, wait for a pullback. Okay, dollar CAD. I'm going to go here in just a couple minutes. Dollar CAD is heading lower. Totally fine. Where's my next trade on dollar CAD? Honestly, if dollar CAD comes all the way back down to like 3,200 or 3,000, I'm going to dollar cost average into that area and trade this back up to a range. Even if it's a 3,200 zone to like 3,800 zone, this is a multi-year range. So I'll play with that. Okay, dollar Swiss, making some fresh lows. Divergent, oversold, looking for a bottoming formation, and just going to hang in there. Stay small, stay alert. Hopefully not a flash crash on the dollar. That would be, look, I've been trading currencies for a long time. I've never seen a flash crash caused by the dollar, but this could be that year. Bonds have broken a little bit. Dollar index is a bit of a sacrifice. Gold has just been the greatest thing ever. So crazy if it happens, but dollar Swiss, keep an eye on it. I said this last week. If the gold trade pivots hard where gold gets a correction, the Swiss is going with it. So if we have a big correction in gold to find that 200 moving average that I keep talking about, Swiss is going to do the same thing. So Swiss will pivot pretty hard on a gold correction. Just a matter of when. And the dollar yen, symmetry is close. And like I said, if, and I don't know, but if this is a head and shoulders, man, this could be one of the bigger trades to go short. If and again, I don't know if it's going to stay below this this neckline. I could see it as all head and shoulders typically do, is they get very messy and noisy around the neckline. But if this is the destination, I mean, if we had this conversation in 6 to 12 months, I wouldn't be terribly surprised if the dollar yen is at 120. So it's not going to be a fun trade for most Forex traders. But just calling the big picture, it's like this is a textbook head and shoulders. And if we're not super messy around the neckline, then yeah, I could see this measure move getting us to like 120. Okay. So, all right, everybody got to jump. I got a class in 1 minute. Hopefully it was enough top to bottom. Okay, cover a little bit of everything, and see you tomorrow. All right, thanks, bye.
Thanks for watching today's A1 Trading Show. Be sure to subscribe and to turn on notifications so you don't miss the next one. All month long, you can get the EdgeFinder 40% off, our best discount of the year. Check out the links in the description below to visit the EdgeFinder homepage, or speak with a team member directly to get the 40% off discount now. Trade safely, and we'll see you tomorrow.